The DXY just did something that every SMC trader should be watching, but what happens next is what's going to determine what we get next week. So in today's video, I'm going to walk you through a bunch of different time frames. We're talking market structure, imbalances, and even the war in the Middle East. And finally, I'll give you my thoughts on what we could get here from the US dollar. So my name is Justin Bennett, full-time trader and founder of Daily Price Action. As always, all of this is my opinion only and not financial advice. So DXY, looking at the daily time frame, I want to start here and walk you through kind of step by step my view on this market so far. We're also going to talk about the headlines in the Middle East too, because we are getting some new headlines, some fresh headlines today on Friday, talking about how the Strait of Hormuz is now supposedly open, right? Not a lot of confirmation on that just yet, but that is kind of what things sound like right now. So it kind of sounds like we're veering more toward peace than war, which is obviously great. My question for markets though right now is, with these headlines coming across, have markets priced themselves to perfection? Okay, we know that a lot of this is already priced in with the US dollar. The stock market, the stocks have been ripping for the past 2 weeks. So is a lot of this already priced in? That is the big question. Now, in terms of getting confirmation of that one way or the other, for me, it comes down to the chart. Okay, so looking at the daily chart, we've talked about this before, but obviously, back here in 2025, this was a very aggressive downtrend from the DXY here, the US dollar index, lower highs and lower lows. Now, since this point over here, okay, so about July of last year, we had the DXY going completely sideways. However, at the same time, this was still a downtrend because of this right here. We had that break of structure below these lows back here. Okay, so this right here, this close told us that sellers remain in control. Now, with this close too, we've talked about this in recent videos, but what you can see here is that off of these highs up here became the external highs for this range. Okay, so in other words, we had the close below here that gave us the BOS, making these up here the external highs. So if we draw a line off of these highs up here, what you'll notice is that recently we did get 2 daily closes above here. And you can see the same thing on the euro, the inverse of this essentially. And it's very, very obvious on the euro USD chart as well. In fact, even more obvious than what you see here on the DXY. So with this, we technically have, okay, in terms of smart money concepts, market structure, we have a BOS down here making these the external high. We have a change of character now, a confirmed change of character on the daily time frame. Now, I know that this is an unpopular opinion because of what's going on with the war in the Middle East and everybody talking about de-dollarization, and I get it, guys. Eventually, the US dollar as a reserve asset will fail, okay? And I don't know, nobody knows if it's going to happen now or if it's going to happen, months from now or even years from now, okay? We don't know that. But looking at the chart, I have to go with what is on the chart right now, and that is this change of character up here. So with this in mind, what I do here is I take from the low down here, okay, the low down here up here to the highs. Now, right here, you can see where the DXY this week has entered discount, okay? So what discount is you take the 50%, okay? So this is the 50% of this low down here up here to this recent high. So the 50% comes in through here. You can see where we have now entered into the discount window. So when you're looking for longs in a market following a change of character like this, you want to see the market pull back here into discount because obviously we want to try to long low and sell high, right? That's always the idea in any market, whether you're trading or investing. Now, with the DXY in this area, though, this is not just a matter of go out here and long the US dollar and hope for the best, because we need confirmation. And as you can see, even with today's headlines coming out, the market is still moving lower. So like I said earlier in the video, the question is, have markets priced themselves to perfection? In other words, are these headlines we're seeing right now, if we're moving toward peace, have markets priced this in already? Okay, so that's the big question. Now, to confirm that, what we need here is something on the lower time frames. Now, before we get to that though, a couple of things. I want to show you something on the monthly time frame. And even before that, I do want to mention that if you guys want to see exactly how I trade SMC full time, then check out the link right here on the screen. That's going to give you a free SMC course. It's a 3-day course, content that you will not find here on YouTube. That's going to show you exactly how I trade SMC full time. So check that out. If you don't see it here, check out the link in the description of this video. All right, guys. So looking here back at the DXY, we have the market moving into discount. Now, the one thing I want to show you too, before we go into the hourly time frame to talk about the lower time frame context, is this monthly time frame. Okay, so we've talked about this before with the DXY, but you can see that on the monthly, this is a level that goes back here to 2011. So this is the uptrend that the DXY has been in ever since back here in 2011. Okay, so obviously higher highs and higher lows moving within the context of this channel. Now, the DXY for really the better part of half a year, I mean, almost a full year now, really, because if we get to the summer of 2026, this will be a full year of basically sideways price action. Okay, so right now you can see where the DXY on the monthly has been finding support here. Okay, you can see that this was support back here in this area on the monthly, and going back here to, let's see, July of 2025, that was the first time we got a test here. And what you'll notice is that since this low down here, okay, the DXY has been holding above here on a monthly closing basis. We did wick below it back here. However, we recovered back above, and clearly we had monthly closes back above here. So as of right now, you can see where this comes in. Okay, if we really want to pinpoint this, it looks like this level comes in right around 97, we'll call it 97.50, okay? So 97.50 is kind of the line in the sand here on the monthly time frame for the DXY, to where if you're a trend line trader, if we get monthly closes below this level, okay, so convincingly down here, then in my opinion, that could be very, very bearish for the US dollar, okay, as in potentially heading back here toward these lows, okay, all the way down here, all right? Now, that's if we get the close below. However, like I said before, when we looked at this daily time frame and this change of character, the key for any trader, guys, I don't care what style of trading you use or what time frame you trade, the key for any trader is you have to trade what is on the chart, not what you think might happen. So what tends to happen here is traders will look at this and say, well, the DXY hasn't been able to get off of support. Okay, it looks pretty heavy down here. Therefore, I think we're going to get this. Okay, and they start shorting the market. The problem with that, though, is that first of all, you're shorting into support. The second thing is that you're trading what you think will happen or what you want to happen. You're not trading what is on the chart, because what is on the chart is the market holding above support. And another thing here too, that if you look at these highs and lows within this context, okay, and look too, I want to mention too, I saw a video recently of people talking about, well, the market's holding below these lows. Okay, and this is bearish because we're not able to get back above this area. And that could be true. This could be bearish. However, at the same time, I will challenge those people because look at this up here, right? We had the market clearly breaking above these highs back here. And what do? We just broke above here. We filled the imbalance back here, and then we dropped. So this right here, yes, it could be bearish. Okay. However, at the same time, it could also be the market giving us this range through here. Okay, we range here for quite a while, right? A couple years, and then we wick above or move above, sweep this area, right? Mitigate this imbalance back here. And then this could be something similar. I'm not saying that it is, but it could be, because you can also see that this move back here was also an imbalance here for the market that we did not take out back here. Okay, so just something to be aware of, just something to consider, because we really have to weigh out all scenarios here for the DXY and really any market that you're trading. But the one thing I want to show you here before we move on to the hourly time frame is that if you look at this high up here, these two highs, and you drag a trend line across here, right, and turn this into a channel, what you're going to notice is that this is also a descending channel off of this high. Okay, so could this be a bull flag, right? It could be. In other words, we had the market take out these highs back here. Okay, so we got the move above here, and now we just moved into this pattern. Okay, and now you can also see where the market's hitting that support level from 2011. So the bottom line here, guys, is this is not to say the US dollar is bearish or it is bullish. This is just to say that if you are bearish on this market and you look at this context here, okay, you've got to be really careful, because we've got this support level down here from 2011. And again, you've also got this descending channel that could be a bull flag following the push out of this consolidation. Okay, push out of this consolidation, we flagged here, and now we're at that 2011 support. So all things just to kind of consider here. Again, I'm not saying that it is bullish because we need confirmation for that, but this is just something to keep an eye on. Really though, 97.50, guys, I think is a big level here for the DXY either way. All right, so let's move back here to this chart and talk about what would confirm the bottom here for the DXY. Again, we're in discount here, so we can, or at least I can, start looking for longs. Now, if we go to an hourly time frame, this is what's going to be key. And this is what we've been talking about in Discord this week. And if you guys do want to join Discord, again, beyond that free SMC course I gave you, there will be a chance to join us in Discord for my help with your trading every single day, Monday through Friday. That's where I spend most of my time, in Discord. So looking at this here, you can see where we had the move lower. Okay, this green area is discount. So back here, you can see where we had the gap down. We went sideways through here. We broke below the lows. Okay. Now, since that time, all we've done here is broken the lows. And this too, back here, a lot of traders probably got tripped up on the euro yesterday thinking that was a change of character. This right here was not a change of character. So let me show you this here. If we take a look at this BOS, okay, again, internal BOS, that's why I have it labeled an IBOS. If we take a look from this high up here, okay, so dragging a level across this high, notice how we never closed above here. We never got the close above this level to give us that change of character. So there really was nothing to buy here on the US dollar this week. Okay. So I just wanted to make that clear. Now, going forward though, what you'll see is that today on those headlines, we did get a new break of structure. Okay. And furthermore too, this down here, 97.50, remember, this is that area that we just looked at on the monthly time frame, right down here. So I do think that this general area down here, guys, is a massive one for the US dollar, for the DXY. Furthermore too, let's take a look at this 4-hour time frame. Let's go back here and take a look at this gap. Okay, so back here, we had the market actually give us a gap. Now from this right here, okay, this was the close where the very next candle we gapped up. Now, this was an open gap, okay? However, if we drag this over, what you're going to notice here today on Friday, we got the market closing that gap. Notice this wick right here, okay? So again, you combine this right here with 97.50. This is a significant area for the DXY. Again, it does not mean that it is bullish, okay? Because for that, what we need to have happen here at a minimum is we need to have a change of character. So back to the hourly time frame. This right here, okay, so this was the gap close, right? This down here, 97.50 or thereabouts, is that big monthly level. So going forward, guys, for next week, what's going to be key for the DXY? We've closed the gap. We're down there in discount. You know, we're at that monthly level. Everything is lining up here. Now, what we need to see happen, though, if the US dollar is going to turn bullish, what needs to happen is this high up here needs to get taken out. Now, on the hourly time frame, because, and I want to be clear about this, because I'm using the daily chart here, okay, for market structure, I'm not using a 15-minute or a 5-minute time frame for confirmation. I need an hourly time frame for confirmation. If I go from a daily time frame as structure, okay, so daily chart, BOS down here, change of character. If I go from this down to a 5-minute or a 15-minute time frame, I'm going to get caught up in all kinds of intraday noise, okay, and that's not what I want. So what I need to do here is go to an hourly time frame. So this is what's going to be key next week, okay, is do we get the DXY coming up here and taking out this high to give us that change of character? Or do we get this market just kind of going sideways, maybe a slight rally here, just going sideways here and then taking out this area with aggression, okay? If we see the market just do that and just continue lower past 97.50 and especially closing April below that mark, then I think that could be bearish for the US dollar, okay? But right now, we have the market. Again, we have to go with what's on the chart, guys. I want to keep saying this because it gets so many traders in trouble. What is on the chart is a daily bullish change of character, okay? But we are in discount based on that range. However, what I need to see now is the hourly confirmation, okay? And if we get this, look, I want to be clear too. If we get this, it doesn't mean that this is the low. So looking at the 4-hour chart, it doesn't mean that if we get a change of character right here, it doesn't mean that this is the low and all of a sudden we're headed toward, 106, 107. Okay. That's not the way it works, because this right here, notice how we had a change of character, a bearish change of character here on the 4-hour. We also have this gap up here and this imbalance. So what this could be is even if we get a bullish change of character down here, that could just be the market moving back here toward this imbalance. And then we potentially get a lower high. Okay. So I want to be clear there. However, this too, though, could be a setup. Okay. Even if we just get the move back here toward this imbalance and this doesn't become the low for the US dollar, even if that's the case, this could still be a setup worth trading next week. Okay. If we get it. So I want to be clear there, guys, that there's nothing here to say that just because we get a change of character down here on the hourly time frame, that is the bottom for the DXY, because you have to understand too that we also have this 4-hour change of character and this imbalance up here. Okay, but the bottom line is that the US dollar is at a critical spot right now on the chart. And like I said at the beginning of this video, my big question for markets right now is the headlines that we're seeing here. If we are moving closer to peace than war, that is a wonderful thing. My question to markets though is, has a lot of this been priced in? Okay. In other words, if we move toward peace, then is this priced in? And it's more of a buy the rumor, sell the news event for things like the stock market. And if obviously we move closer to war, then obviously we could see some panic selling and a risk off move there, and the US dollar move higher on that as well. But as far as the chart goes, guys, for me next week, what this is going to come down to is we've hit a critical area here for the DXY. I now need to see confirmation that we are going to get a short-term bottom at least with a close above these highs. Okay, do that on the hourly time frame, and I think we have at least a short-term bottom to play for the DXY, at least back there toward the imbalance, possibly up here around 99.70, possibly 100 or so next week. But we need that confirmation first. Without that, guys, this is a downtrend and there is nothing to buy just yet. Keep it locked in here by subscribing to the channel for daily videos, and also check out the video right here where I walk you through my 15-minute liquidity sweep pattern step by step. It's incredibly simple, but also very profitable. Until next time, trade well. I will talk to you again tomorrow in the SMC Outlook.